Thank you. So in the next segment, we are already very much going into cryptocurrency investment trends. And I guess that's one of the things that we have been looking at the market, always going up, always going down. And we're wondering what's going to be held up for us over the course of the next couple of months or so. So today we have some esteemed panelists with us today, and we'll let them introduce themselves, starting with Vincent.
Hello, very good afternoon. I think the first thing I need to do is change my LinkedIn profile picture and don't look like me anymore. My name is Vincent. I founded Decentralized Consultants a couple of years back, basically to help out with advising companies on crypto. Insight Genie is an AI company I also founded. We do deep tech, voice analytics and AI for predictive analysis. For the crypto space, right now we are still working with governments, specifically in the formation of free trade zones in order to do a regulated place when it comes to cryptocurrencies and cryptocurrency investments.
Okay. Yes, please.
So I founded Jubilee Capital Management 2015. This is an early stage investment firm focusing on cross-border investments between China and Southeast Asia. And with the first fund, we invested in 14 companies, mainly in China and Southeast Asia. We have a strategy of 4-3-2-1, 40% China deals, 30% Southeast Asia, 20% international, and 10% Israel. And in 2017, I started the crypto fund. And that's when the crypto bull run was still raging strong. We created a fund to invest in the early stage layer 1, layer 2's investments. And I was telling Steve, because he was telling me to come and not speak on this panel. Today actually is the last payment that I've received for our crypto fund exit. So after almost 7 years, we've closed our crypto fund and fully exited, and with a good return of 4x. Yeah. So it's been a long while. Although when we started the fund, it was a 3+1 5-year fund. And we invested in over 20 different kind of projects, token projects, and different layers of projects. But it's been not so straightforward to exit. And with all the volatility that you see in the market, it's been quite exciting journey.
Well, Forex still definitely a fantastic return. And I'm Lim from Vision Group. We are a generative AI company focused on increasing sales, optimizing costs, and solving manpower challenges for both the government, enterprise, and SMEs. I'll be the moderator for today. So let's jump into the first question. What's your view very much right now of the cryptocurrency market, and what trend do you think might be upcoming over the course of the next few months?
My view is in the consolidation phase, right? Because the macro environment is changing very rapidly, as we all know, and investment flows are now going back into the traditional market. Although Bitcoin price have gone up to 62, 63, Ether price has come down, the amount of altcoins that's in the market is by far too many and fragmented. BTC, if you look at the overall market, it's about 2.3 trillion market cap for all crypto projects add together. BTC dominance is still more than 50%, 53%, maybe thereabout. And Ether is another but maybe 20%. And all the rest of the altcoins are just way below that. And a lot of activity is happening if you observe what's going on in the token 2499, even last month or a few weeks ago when we were doing F1 week. There are a lot of projects are promoting all fundraising. But the number of adopters in the market is still not as strong as what we hope it to be. So with interest rates coming down, investors are spoiled for choice. Now, whether investors are going to put dry powder to work in the crypto space, my personal view is they are more cautious than before. So a lot of investors are coming from the crypto natives. Those of us who have been in the crypto space for long enough, we look at the players. The old ones are phasing out. A lot of old, active, aggressive players are going to the backs, to behind the scenes. The active players these days are younger ones, right? The new generation. They have more innovative, creative ideas, more energy, right, to do all the development work, networking, fundraising. So I think there's a change of generation, in the crypto space. And this is probably the fourth wave of bull run right now. So with Bitcoin hovering around 64, 63, I think it's very good. It's establishing a new base, a new support. And just as Steve was saying, if Kelly Woods is saying 2 or 3 million by the end of 2030, I personally don't think we'll go that fast. But I would say if we can go up to 100,000, that's still quite possible. Yeah.
Thank you. I'm probably going to get a lot of flack for this, but I think the crypto market is weird, right? If you've observed what's happening in the market, looking at all the coins, I agree with him. There's just too many altcoins out there. There's all sorts of weird projects, and in the last run, those that did really well were the meme coins. Now, I couldn't, for the death of me, figure out a use for the meme coins, but they are the ones that are being speculated on. They're the ones that rise 200% today, drops down 50% the next day, goes up, another 300-400%. It's not to say that I don't buy it, because it's going up, and we do participate. But in the end of the day, there's not much adoption. So the market is very fragmented, right? So you have your institutional people who are buying Bitcoin, the main coins, your Solanas, your Ethereum, and then you see a really stable price gauge for all these L1s or L2s that have practical use and possible adoption. And then you see the degens participating in your meme coins and everything else, and or some practically even say, I invested in this shit coin today, right? The degens are proud of it. And actually go and say, I've invested in this and it went up how many percent. And so it's a fragmented market, and for someone who's trying to advise government on coming up with commonsensical policies when it comes and telling them about the future of blockchain technology and how adoption would happen, it's very difficult when you see the market move in this manner. So personally, a lot of the fundamental analysis that we are used to doing for any traditional assets, your PE ratios, whatever, doesn't really make sense. And if you're investing your own money, join the ride sometimes, but invest long term only in the main coins, because I think these are the coins that are mainly to stay.
If I may add, maybe just before we share a bit more, can I have a show of hands? How many of you are investors of any cryptocurrencies? Now, right? How many of you started investing, let's say, 2016? 2016, okay. So you've gone through the wave, right? You see the highs and lows. And for me, as I reflect upon the journey that I've gone through, and I'll share with you what I invested in, I think it boils down to what is the motivation of investing in it, in this digital assets. The terminology have changed over time, but a lot of it is more marketing, right, oriented. And I personally think there are a few motivations. One will be the technology developers, those who are early adopters. They are more purist, because blockchain as a tool is a neutral tool. You can use it for good and you can use it for the not so good. And when I started looking at projects in 2015, 2016, I was more observing, because I'm not a technical developer, but I look at it from a commercial point of view. And I saw some very good projects in Israel when they are just starting the Ethereum Foundation, they started investing. But a lot of these purist guys, they want to create an alternative world that's different from the centralized world. We are operating in a very centralized kind of environment with central banks controlling the financial system, and a lot of these young innovators, they are trying to use blockchain to create an alternative structure. But over time, they sort of realize, even though they want to create this alternative token, they can't beat the system. And with regulators coming in, it's going to be much and much harder for them to kind of integrate. Talking about, say, Web 2, Web 3 integration or migration, it's going to be very, very hard. And then you have all this inflow of short-term investors who wants to come for a quick punt, and they scam the investors, and this creates a lot of havoc. And so the turbulence that I've seen over the last 6 years actually is a reflection of the the actors, the players in the market. Unfortunately, we have a lot more very vocal bad actors, right, in the space. So, but the tool, I think the tool is neutral. The tool is good. We can use it for a lot of good use cases. And later on, I think Huijie will share about some of the DePIN cases which I've seen in the past. Just one last bit I'll add. Now, when I first started investing in the layer ones, the project I invested in was Silica, and it was very good, 20x, 30 to 40x return for me. I invested in Telegram when they were doing the Gram token. That one, there's very good use case, and the user base at the time was almost 250, 300 million users really on all the Telegram users. They want to create a kind of a super app equivalent in the crypto world using Gram token. But unfortunately, the US regulators came in and they sued the Telegram founders, and they have to split up, go underground, return capital back to investors. So after a long drawn legal process, it's back to square one, right? But now the team has split into like 4 or 5 different subgroups, and I also invested in another one called Everscale, which is part of the initial team. But still, they have not really gone back to the mainstream to increase adoption. And yeah, so I'll just end here by saying that it goes back to the motivation. Why would people come into the space? Is it for short-term gain, or is it to build a good tool to be used in the industry? Yeah.
Perfect. Very insightful. And you touch very much on one of the key areas that leads to the next question, the areas of DePIN, or Decentralized Physical Infrastructure Network. So maybe you can share some of views on DePIN, the projects you have seen. What do you think about it? And whether you think that will be something that will be the next wave and something that's actually sustainable. Please share some thoughts on that.
Okay, I invested in one company called Top Network in China. That was way before DePIN was being coined, this term. It's basically a VPN network that's open up for sharing. And they connected up with a lot of the VPN operators in China and US, and they allow users to use the network to access information that has traditionally been blocked in China. And no different from, let's say, we watch all this media, you go VPN to watch some of the movies from Hollywood, which is not available in China. At that time, they started to build this network, and they had very high adoption rate. And as you access and use this VPN network, you mine a token. It's like you earn a token as you use it. So I think this is where you call Decentralized Physical Infrastructure Network is connecting Web 2 and Web 3 and creating good use cases. The concept works, and it does make sense. And these days, you may have heard of this project called Helium, right? Helium is it's a super Wi-Fi project that connect for the whole world. In the Web 2 space, there's a project called WeMaster. It's a Chinese company, WeMaster. I think Master Key. Basically, it's connecting all the hotspot provided by retailers, by shopping malls, by corporates, and you connect a big network. And instead of using your GSM to access online, you use that network. So Web 2 space have already have this kind of network in the past. In the Web 3, it is just a different form. Now, I'm an accountant by training, so a lot of times we look at substance over form. Right, so the substance, there's no change, nothing new under the sun, right? A lot of these concepts and application are there. We are just changing the form, the use case, and the application. And in the process, trying to create tokens for the user so that this value can transfer among the players in the ecosystem. So I think DePIN is a good concept. Yeah.
I don't have much experience with DePIN, so I'm not really an expert to comment. My only experience, my only exposure to it would really be in AI and DePIN technology. Basically, AI is expensive, right? In order to process, you need actually a lot of, you either pay, if you manage a capital raise, you pay AWS, you pay Microsoft in order to process your algorithms. But DePIN allows us to bring down our cost of operation. It democratizes access, right, to AI computing resources, and that's something that we are currently using to, bring down our costs.
I'll give you an example of a project I invested in the past. It's a Korean company called Content Protocol. this is part of the Watcha network. It's like a Netflix equivalent in Korea. That was in 2018. So they create this decentralized platform where you can watch a K-drama, Hollywood movies, using that Web3 access. And as you watch, you earn token. So you don't need to pay like Netflix, like you pay Netflix today. You watch it, download your app, you watch it on the mobile phone. This Web3 interface allow you to watch the Korean dramas and the US Hollywood movies. But it is kind of like a DPIN, watch as you earn. And but it kind of stepped on the toes of the media giants in Korea. And the regulators came down and clamped them down. And the whole project have to be closed down after 3 years. But the good thing, fortunate for us, is when the token got listed on the exchanges, we managed to get out from 20x, right? So this, in a way, although the application is very useful, but we have to keep a watchful eye on what the regulators think about it. If the regulators feel threatened or the media players feel threatened, the media players may lobby with the government to close it down. So same thing for like if you see in Telegram or even in telecom sector or logistics, it's the same. The fintech is the same. So every application, there's good use cases, but we need to be watchful and work with the governments, right, to help them understand, see how can all these new innovation coexist with existing players. Otherwise, innovation can never flourish. Yeah.
On that note, I move to really talk about regulation. You're right, a lot of projects actually got killed by regulation, right? And if a lot of project owners also have a very anti-government stance, right? They start the project and they don't want to consult the government. They want to build this, like I said, an alternate reality without regulators and be able to do their own thing. That's very dangerous. And I think we are seeing the impacts of it now. Even the US, SEC is suing the investors into DeFi platforms. DeFi used to say, oh, it's DeFi, it's not me, peer-to-peer, nothing to do with me, I'm just projecting technology. But with nobody to sue, the SEC sues the investors, the A16Zs, So the reality is that you need to work with regulators. And for us, what we've been doing is working with free trade zones. So we have a little bit more flexibility when it comes to regulations. It's very hard for you to say, I want to change the laws and rules of this whole country, right? But a free trade zone has, by law, the ability to write their own rules, their own implementing rules and regulations. We did one with the Philippine government. It's called the Freeport Area Bataan. It's across Manila Bay, right? Where it wants to become a digital asset haven, and commonsensical rules, regulations, there's consultations on a weekly basis. You can actually form and influence the rulemaking in such a way that makes more sense for your project to have a more longevity and grow at least to a stage where you can, get some sort of attraction in the market.
So we see very much convergence in the areas of previously crypto projects being just crypto and a lot of physical traditional projects being traditional, and very much just mentioned that we see a convergence of that where it actually creates real value. And in the areas of regulation, things are becoming much clearer and more companies looking at adopting those regulatory standards in order for them to comply. So do you see a trend for institutional investors coming in more heavily into this particular space, considering that in a way, from a risk perspective, regulations clearer, and now from an actual usage perspective, there's actually more usage. What's your view on that?
So I'll share two investments that I've made in this space, more in the fintech area. One company I invested is called Sparrow, right? Sparrow Exchange. I'm not how many of you have heard of Sparrow, right? So they do crypto option trading. And when we first invested, they didn't have the license, right? But Singapore, you need the payment service license in order for them to onboard clients to hold the crypto. Now, it took them more than a year plus after we invested. They got the license, and although they initially issued tokens, later on the tokens were kind of became defunct. And they were subsequently they got the MAS license and they got bought up by Amber. And today, because of the regulation clarity and they got a license, more and more investors are prepared to put some capital to work. All right, they buy Bitcoin through them to OTC, and buy ETH, and then you start start investing in some option. So if you are private banking clients, your RM will always sell you ELNs, right? Equity linked notes. You try to bet against maybe the Apple shares or whichever shares, you get the 20% yield on that, and you have the strike price and the term. The same thing is happening on the crypto space, and the biggest player in Singapore is a QCB, QCP, right? So they started the whole trend, and Sparrow was another beneficiary of this trending. So now DBS is starting to adopt this, and they offer it to their client. And behind DBS, this platform, they are actually using Sparrow, right? So on board and off board, right? On ramp and off ramp of the funds. So this is one example that I can cite, which is on how the market has matured. More DBS private banking clients now have an option to use their fiat to convert to buy Bitcoin. You may still see the face of DBS, but at the back, the settlement and the license regime is going through another party. And the other example I'll cite is another investment I made in Switzerland. It's called Stein Fiat 24. This is my last portfolio, which I sold last week, right? And payment just came in today. And this company, I'll just share a bit more. Stein is a Chinese founders. Their whole business model is about creating a Web3 bank. And this Web3 bank allow crypto holders to on-ramp, off-ramp using the Swiss network. So they got the license from the FEMA in Switzerland. It took them 2 years. Right? When I invested in 2017, they haven't got a license, but 2 years later they got it. It was a painful process. And with the license, what it does is so they need to keep a minimum capital, like a capital reserve, on the balance sheet. And with that, if you open up a bank account with them, they create a wallet for you. And this wallet is like an NFT, a digital identity. And with this digital identity, you can send your fiat to the network. They can convert it into crypto. Or you can send your crypto to them, and they can help you to convert to fiat and send to any of the Swiss partner within the Swiss network. So it's on-ramp, off-ramp. And they can also allow investors to participate in DeFi, because a lot of DeFi like Uniswap or your PancakeSwap, all this, you need to go through the decentralized network. And if you don't have, you're not familiar with using all these wallets, it's very painful. So with the digital identity that they create for you, you can actually use it to trade on different platforms. So again, that's an example of bridging the traditional financial market and the Web 2 and Web 3 market. And today, I think we sold our share to a Chinese crypto fund, which have bumped up their valuation quite a bit, and they are rolling out in the whole Asia. So that's 2 examples I can share.
With regards to institutional investors, I think the possibility of them investing in altcoins will be very, very low. I mean, they will stick really to Bitcoin, your Ethereum, your Solana. Maybe a top 5 or top 10 coins is the max that institutional investor, if you're really looking at that, will do. I mean, the launch of the ETFs was a fantastic innovation in that field. It allows people to then come in, but also is linked to Bitcoin, right? And nothing else. I mean, they're trying to do a Ethereum one, but they haven't got that out yet, right? So institutional investment, sure. I mean, you'll come in, but you'll still be sticking with the main coins. So that's where the liquidity is going to be. Where another big trend and where institutions are getting into is stablecoins. And stablecoins is something that even banks themselves are launching. Not sure if any of you know, but like a Union Bank of the Philippines launched a Philippine peso stablecoin that is on the decentralized network. You can play around with it. And many countries are doing CDBCs or considering CDBCs, right? So that's where institutional funds will really flow into. Altcoins, it will really remain the domain of VCs, will remain the domain of degens and the crypto natives more than anything else.
So very much looking into this space, and we talk about institutional investors, but how much has the investor sentiment around crypto investments shifted in recent months for retail? in your view? And what might this mean for tomorrow's investment strategies?
Well, personally, I don't think much have changed. There may be a lot of events, but not much new money coming in. It's just existing investors in the crypto space rebalancing their portfolio. That's my view, right? Younger generation of crypto actors are coming in. Many of them have a good resource, could be second-gen family office that are prepared to put some capital to work and experiment. I think they're creating a lot of good, interesting projects. But by and large, I think the market is still going through a kind of a consolidation phase.
Like I mentioned, if it comes to institutional investors, I don't think they'll go away from the top 5 coins. Personally, in my own opinion, and don't quote me on this because I think I lost a lot of money following this mantra. I think of crypto investments in 2 ways, right? One is the technology. Does the technology make sense for the use case that it wants to apply, right? Whether or not the decentralization, the security gives economies of scale, gives efficiency to this particular project or the use case that it wants to do. The second one, but that's the technology. The second one, and where I think a lot more projects are thriving on, is the alternate way of doing business. That's a social DeFi way of doing business where we are able to democratize the earnings across the network actually makes sense, right? You a good example. For example, people who come in and say, I've set up this token in order to change the way payments are done, right? The entire payments industry is worth an X amount of dollars. But there's no way that token will be worth 10x that ecosystem, right? Because you are replacing the ecosystem, right? You're supposed to drive efficiencies into the ecosystem. So the valuations also have to make sense to me sometimes in order for the whole, before, it's considered investable.
So given the uncertainty, the potential, what would your key advice for someone looking to invest in cryptocurrencies today and tomorrow? And please be reminded, investing is your responsibility. Whatever we share is just for sharing purposes. What's your view?
Yeah. Okay, my thought is this: if you are new to the digital assets, look at how much you are prepared to invest and you are prepared to lose, right? These are risk capital, and then start to allocate to a few simple investment that you can understand with. As simple as opening up an account. We can work with a licensed operator in Singapore. One of these licensed payment service provider, get yourself onboarded as investors. You have to go through the AI checks. You can buy Bitcoin, buy a fraction of a Bitcoin or buy Ether just to buy and hold. That gives you a sense. Number 2, what I can do is look at some of this major exchange and open up a bank account, open an account with the exchange. So that gives a view and feel the pulse of the market in there. And number 3, if you are more adventurous, you want to go into the unregulated space, because the first part I was talking about is more the regulated space. You can go into the unregulated space, then you can open up a soft wallet, like get a MetaMask, get your Ledger. These are hardware wallet. Get it first. Transfer the tokens that you have bought into these wallets and start to connect to some of these decentralized DeFi network. There's a lot of materials online and a lot of deep information that you can read to find out more. This space is very fast moving. If you're not in it on a almost like weekly or even daily basis, very fast you'll be outdated. So it can be very exciting, but I would encourage you to read more, get your feet wet, buy a small amount, get a feel of the pulse, and then join some of the events that's happening when you listen to people, what they are talking about and what's the latest trends. Recently, this CZ was released, right? And he announced that he has this big project called Giggle Academy, right? Where he's using blockchain to now provide free education to those underprivileged who don't have access to good education from 0 to 12 years old. So this is a space that you can watch because these are big players who has very deep pockets and is prepared to fund as much as is needed to provide free education to 700 million kids around the world. So I think if as you get involved yourself to get some coins, watch what are the big whales doing because they are setting new trends and it's good. I'm happy to see that he's using blockchain to do good, and that reflects the good values that he's having, and I'm encouraged by that. The whole space will get better and better, in my view, as long as the actors that are in it comes with the right motivation. The regulators regulate those who are bad actors and not kill all the good guys. I think then we should have a much better Web3 environment going forward. Thanks.
I'm conscious of the time, and again, I'm probably gonna get a lot of flack for saying this. When it comes to crypto, invest what you're prepared to lose, right? It's very, very volatile. The market is very, very volatile. I can remember the only time I really made a lot of money with crypto is when I forgot about it. I was mining Ethereum. I had 8 mining rigs in a factory somewhere in Malaysia. It was running for the longest time. At that time, Ethereum was $75. I still remember. And then it ran for 2-3 years until all the GPUs burned out. Right? I completely forgot about it until Coinbase sent me an email saying you have to close your account. You're a Singaporean. That was when I actually, why do I have a Coinbase account? Oh, yeah, I was mining Ethereum and I checked into it. Oh, I have Ethereum. Oh, it's $3,000 a pop now. It's very, very different. So that was like really only time you made significant gains. But that was my own experience, right? But it's a very, very volatile market, right? So be prepared to, wear diapers if you're a little bit more nervous kind, because it can be a very, very wild ride. Thank you.
Yes.
So being conscious of the time, we have very much covered both the past, the current, and the view of the future. I hope everyone has had value in it and enjoyed the session. Thank you very much.